Good evening, all. Ira Epstein, and here we are with your Spider ETF stock market wrap-up. And this wrap-up is for the evening. What an evening it is. On Monday, the 13th, 2023. You know, some markets acted like Black Monday in 1987. If you took a look at what interest rates did and how much they lost in value, you're there. Okay, yeah, it's exactly what happened. You've entered that time zone. So now what happens, because we get the CPI reading in the morning, and let's assume that the CPI reading is flat with last month. Well, that leaves the argument open. Does the Fed go for 25 basis points, or does it say, hey, with all that's going on around us, maybe we give the market a breather? We're talking lag time effect anyways to see what happens. When you look back, the Fed broke the market. I mean, any way you want to talk about it, that's what happened. We were looking for where the negative was with all these interest rate hikes, and it crept right up and got you. Got you in the SVB bank. We've seen three banks altogether basically fold in a 2-week period. Are there more? There probably are. Did we get a bid for any of the banks? No. Are you aware of that? You haven't heard anybody say it on the news. There was no bid that was accepted. So now they got to figure out, how do they put this out there? Can they sell the bank? Do they have to give pieces away? They're bringing in different people to run the different bank issues temporarily. And they'll get people with experience. The head people will be fired. They're gone. The president fired them all today, and he has that right, okay? Because the banks have been taken over by the federal government. Now, would I be with people that are running to their bank to take out their money in some of these regional banks that are getting hit? Absolutely. So I'm not one of these guys that's going to tell you, be calm, do that. No. I would get my money. I would move it to one of the big banks that's well diversified. If you want to do business with that bank again, you're going to be able to do it. Give it 30 days and see where the dust settles. But even with Fed guarantees, your money's guaranteed. I want to sleep at night. Okay? I own a brokerage company. You think I haven't had clients when the events, I think it was 10 years ago with the Man Financial events, they were saying, Ira, we love you. We know you're not part of that. We know that you don't have money with them, but I want to take money out right now because I'm just uncomfortable in that sector. I was not happy to send it. I didn't want to lose my client. You did it, and they came back. Okay. Well, that's what you do. And I understood their position, and it hurt. But I had to do what I have to do, and I'm still here. Well, the good banks, the regionals, will still be there. But what if they're not? What if your money, there's another event? You want to be the guy that says, darn it, now my life's changing. I don't want my clients, and I don't want people that listen to me in that. I'm not trying to create a panic. We're talking, what do you do? If you want to keep some there, but move some. Don't let your life get impacted because you're convinced they're a really good bank. That's all I can tell you. You take it the rest of the way. So now the question, and I'm going to come back. We get a CPI number that's hot. You get a hot number, I think the Fed has to go 25 basis points. Hot being it exceeds expectations. I'll talk about that in the morning in my morning flash video, but that's what I look at. If you get a wobble, and that means that the market comes in under the expectations, I think the Fed then has the cover to say, you know something, we're going to back off right now, and we're not going to go down in rates. We're just not going to increase them at this point. We're going to take a look, and the wording is the key when they do this. We're going to take a look around us and see the impact of all that's just happened. Tell me what's wrong with that. It's not scaring the market. They're making sure that everything is working right. And then right after that, they can go wherever they want. That's what they do there. They have no cover if they don't want to scare the market by not going up 25 basis points, in my opinion, if they get a hot number. So that's how I'm going to look at it. What are the markets saying? The markets are saying that the economy can't withstand at this point in time without things breaking these high rates. What about commercial real estate? Nobody's talking about it. I live in Chicago. There's empty buildings downtown. LaSalle Street's our financial district. The building I'm in, the Chicago Board of Trade building, it's not fully occupied, nowhere near it. All around me down there, you still have all the storefronts that used to be going business concerns, be it clothing stores, and I'm talking all the lead shops. They're empty. The restaurants, they don't have enough people to survive the way they are. So you get everything cut back. There's more than just one sector. That's the point I'm telling you. So be a bit cautious, okay? Schwab. Haven't covered this ever. I want you to take a look at what has happened to this company. A fine brokerage company, one of the best there is. But when you get zero commissions, you have to find other avenues to make money. And the way that they make money is they become quasi-banks. Now, the good news is, and there is good news, it's diversified. They have millions of clients from every aspect that you can imagine. Commercial, institutional, individual. But as interest rates fall, that's one of their main areas that they make money on. And having owned a brokerage firm and a stock firm, I can tell you that interest income is exceptionally important. Well, interest income fell for them, and it's going to continue to fall now at this point. In addition, they, like others, were trying to hold on to as much interest as they could, and now they can't do that. If you want to attract the money, you got to pay up. So that's what you're reading about. This is what it is, all right? The company is solid. I want to make that clear. People that are saying, and they're flashing out here, will go in and buy this company. This was a company that was just $85. It's been cut in half. I can't argue that, but do I have a reason as a technician to do it? Let me sum this up. None. This is not a bullish-looking chart. This is not a chart that has yet bottomed. You had a breakaway gap, a runaway gap, two gaps in a row. That's what they are. So when you get that, it was the warning. Today was that one. Doesn't mean it can't be filled. This chart has had serious damage to it. When we look at the swing lines, they had been bearish, not are bearish. Very big difference here. So let's you and I come back just a little bit and look at the chart action. I've not covered this with you, but the way I teach my charting course, and it's on our website, so you can go to it at iraepstein.com, lower highs, lower lows. That's bearish. Do you disagree with that? And then we know that the market did its 1, 2, 3. Okay. But what about, let's go back, if we could, with moving averages. What is the chart doing? You're about to get a crossover where the 18 is going to get underneath the 200-day average. Did this market even pay attention to the 200? Normally it does. It paid zero attention. You had that warning 3 days ago. Today, day before, and on Thursday. It just got through it, and then Friday, I knew there was a problem. I looked at it, and I said, this isn't right. And I was telling you and other clients, you got a problem. Be careful. There's going to be a potential money panic here. You've got banks failing. At first, it was one bank, the SVB. Then we get the Signature. We've had the other bank, Silvergate. That was the third one. Now we have some of the other regionals down 60, 70% in value. The market's telling you a story that, yes, the Fed is there, but people that are smart are running to the bank and they're saying, I'm going to let the dust settle. Give me my money. I want to put it in somewhere else, and I'll be back. I love our bank, and the banker's saying, please don't do that. I get it. It's protected now, and I understand. Leave a little with them. Take a little with yourself. Diversify. That's what the banks were supposed to do. You do the same. You may not agree with me. I've been through market crashes. I've been a registered broker since '69. I have been through these things. They don't end up well. They don't end up, they're suddenly over. That's the point that you got to be careful with. So when you look at this and you can see how the market's coming under the key averages, the Bollinger Band, it's way under. And we had, if we go back together here and we look at this chart at all, if you look at this day, the market had a range of 73.16 to $2.67. It closed $2 off the low. But when you look at the range, you had about, what is that, a $9 range roughly? If you divide that into 4, you were in the bottom quadrant right there. The next day you were there, and today, not. So I don't know if it's a true breakout to the downside the way that I do it. My rule is bottom quadrants for each one. If that's there, I didn't do the math, then boom, that's your breakout. But what do I see? I don't need that to tell me. I see that any rallies back, if you get one, to 73.60 to wherever the 18-day average will be sold. But to get there, you got to have a 40% rally in the stock. You think you're getting a 40% rally in the stock right away? Congratulations if you do. I don't. I see something else happening. If we look at the slow stochastic reading, both numbers were under 20 today. Both numbers on Friday were under 20. Both numbers were under 20 on what day? They were down there on Thursday. And what about the day before? They were already embedded, is my point. I'm looking at this. That's when I decided to say, I got to look at this. We're down here. I thought you'd go to 73.68. That's where I thought you were going. Obviously, I didn't know we were going to have the banking crash on Tuesday of last week. If I did, if I did, I'm the smartest guy in the world. I didn't know that we were going to have a banking crash. And as you could see, the market fell here, and I'm going, what the heck's going on? Why is this stock down so much? And I'm asking myself, and I'm looking at the embedded readings setting in, and I'm going, this is not good. And guess what? Until the red line closes over 21, it ain't good. And it's going to get sold on rallies that fill this gap, in my opinion. And again, I love the company, but there's a time and place to own them. You don't fall in love with things I shouldn't own. Lower highs, lower lows in gasoline. Okay. Do you think that this is the time that you're going to want to own anything like this? I don't think quite yet. We have to get over this hump right now. We probably have to get beyond next Tuesday's. Today is the 13th, so that's going to be next Wednesday's FOMC meeting announcement, and then I'm going to feel better. By then, all this will be behind the market in many different ways. Other banks may fail, they may not fail. We'll see different things that go on, but it doesn't matter. The event will have been taken place, and I'm going to look here that the 56.11 area, if it gets down there, will probably get the short covering. I don't think people are worried about buying gasoline just yet. Everybody got scared. This was a jolt. This is a major jolt. This is like 1987 all over again, like Black Monday. I remember it. I went through it. The only reason I'm here is my offices were on the first floor because I wanted to jump out the window, and then I realized I'd live. And I mean the first floor. I would have been on the sidewalk. Lower high, lower low. Imagine owning a stock firm and a commodity firm in that. I'm a lot younger. I'd never seen it. Today, I'd still get near a heart attack, don't get me wrong. But it's different. I've been through it. Higher high, lower low. This is the battleground. We had said here, this was a spot to come out against the upper Bollinger Band. This is your pullback. Long term, you've lost what? You're correcting the momentum of the upside. Let it do it. There's nothing wrong with the chart yet. It's just not bullish anymore. In Tesla, this is a market that has a problem, all right? It's come down. If it embeds, that's an if. Today's a day where both numbers were under 20. Agreed? Let's get another day here. If it'll do it for me, it should. I don't know why my work doesn't want it to do it. I've got to come back one time and see if it'll do it. Sometimes that's what it takes. No, doesn't seem to want to go back. But in looking at it, I think we're at our second day of embedding. If you're down tomorrow and you embed on these rallies, it's going to keep getting sold and not lift itself until it loses that. See, this one came back. So if you don't mind, no, that one doesn't want to do it. I get what it's doing to me. All right. XLI, down into support, oversold, cover shorts. That's what I'd be telling my clients in the industrial sector. And you're going to go, Ira, this can fall apart. Doesn't matter. The easy money was on Friday when you went and made a run for the Green line, the 100-day average in the Bollinger Band. You're not embedded. You don't want to hang around. The odds of staying under the Bollinger Band, 5% of the time. Is this an unusual time where it can stay more than that? It is. But there's one word that I haven't used. Tuesday reversals. When's the last time you heard me talking about that? If you go to the Stock Traders Almanac, what you find is that on big days on a Monday, typically you get a Tuesday reversal. Just go back, read it, Yale Hirsch, Stock Traders Almanac. Excellent book. What used to work still works. I was reading today a story about seasonal Bitcoins. And I'm going, what the heck is this? I just read it today in Market Watch, and I'm reading it, and it makes all the sense in the world. They have figured out that these Bitcoins and other coins, some of them have themselves. You know what halving is? They have. And there's set times they do it. Well, that's a seasonality, and somebody figured that out. I give them all the credit there is. It's correct, and it probably has merit to it. Higher high, lower low. No, I don't see anything to do in stocks at this point. In the home builders, well, we knew that there were problems, but there's good problems too. Interest rates are falling. Nobody's mentioning this. This is the savior. If interest rates are falling the way they are, and they got smashed, you lost on the 2-year was at 5% last week. It's just above 4%. Now think of what the other rates are doing in the back. They're down 0.5 points all over. That's going to flow over in the mortgages. Well, this is spring. I think that for the home builders, this is an interesting time. And no, it's not a buy on this chart in any manner, but it's certainly something in the back of my mind. I'm going to be looking at the chart action saying, can this flash out anything soon? In the energy sector, why is it down? Well, the Party Congress ended in China. I didn't see anything where they came in to rescue the property market, infrastructure in a big way. If anything, they're turning inward and very, very cautious. A 5% growth rate is ultra conservative. So that puts the market under the pressure right there. I can see it. Now, also turn your attention to where WTI crude oil is in the United States. It's trading between 74.5 and 75. Under $70 a barrel, we're supposedly, I use that word cautiously with the Biden administration, but supposedly going to start replacing oil into our strategic reserve. Let me warn them, do it. We don't want to be at anybody's mercy. We want to replace it. If they can get it done, it's one of the best commodity trades I've seen of any president. It'd be phenomenal if they can get it done. In GLD, well, we know what traders are doing. There were markets today that were classic cases. You saw people running to Treasuries. That's why yields fell so much. You saw people run to gold. You saw the gold-silver ratio unwind in a big way. In my book, silver is not a precious metal. You can argue with me till you're blue in the face. It's precious to me means it's got to have a value ideally over $1,000. That's what I make up. So you want to tell me that silver at $10 an ounce, I'm just making it up, is a precious metal. I don't think it is for an ounce of silver. At $20, I don't think it is, okay? Gold is, certainly. So when you got gold pushing up here, $1,800 plus, yeah, $1,900, it's a precious metal. But it's over the Bollinger Band. What are the odds of staying over that? 5% of the time. It's only Monday. You can extend it a little, but you wouldn't get me in there. SLV, here's the return. So the market jumped right over the 200-day average and the 18. I would say it's going to have big resistance at the 100 in the upper Bollinger Band. This now has caught the shorts. So when you get chart action like that and you catch them, they got to buy their way out. Margin calls go, all that. So you can get up a little bit more here, but you're not over the Bollinger Band either. In the copper market, this feels the pressure of China doing absolutely nothing, but it actually acted not that terrible. The market was a lot lower and managed to come back off its lows. It did the same in the futures. And obviously here you had a market that surged at one point, but what do you do typically? And that's what you play on charts. What do you typically do? You typically fail on the first challenge of a 200-day average if it's on the upside or the downside. You look for resistance to come in there, support if it's underneath. You're overbought. And that's exactly what I would have told you. I would have said, You got to throw out your emotion. Days like today break your account because you get emotional with it. You can't get emotional. You got to step back. UUP, the dollar's probably made a major top here. Major. Okay, people weren't running to it for security on the banking crisis. The crisis in America was one thing, but in England, there's another SVB branch. It was bought today, and that's a great piece of news. But SVB is in 13 countries, has 17 branches in the United States. Every tech company that's dealing with them anywhere had the same issue. And in those other countries, I don't think that the FDIC works there. I'm not convinced it does. I don't know enough about international law. I have my doubts. And we'll see. All right, you can fill me in on that. I'd just like to learn. It won't matter. I'm not an international law person, but it would seem to me that they're chartered under the laws of that country and we're operating as a foreign institution. If we want to, I imagine we could put up our money to rescue it, but I would doubt that we did, and that's why I think the Bank of England stepped in with HSBC and bought SVB. I think it's a good business for them. They want to be in the tech business. It's a way to do it. In FXE, well, you can see you jumped up against the dollar to the Bollinger Band. Do you buy Bollinger Bands? Well, you might. I don't want to be the guy doing that with you. Only 5% of the time do you stay over it. Now, if you really develop tight sideways action, that's how you get breakouts. But right now, what you're doing is just went to the Bollinger Band bottom, now the top. I'll let somebody else want to own it. And that's how I'm looking at the markets. So I'll be covering this for you in detail in the morning. And you want to be with me in the morning because I discuss both the fundamental and the technical parts. So when we get together, the videos are about 15 minutes long. I do them in such a way that I'm covering for you all the main sectors. We will touch on daily charts, fundamentals, the day's events, what reports are coming out, what's the market looking for, or if they've come out at this time, what's the reaction, what should we be looking at? Weekly charts. I rotate these all the time. Here I'm covering Schwab, okay? I've never covered Schwab before, so those are going to change, but I'm covering 40 charts at a time and doing it in a way that I hope you like. And then each Friday night or Saturday, I typically put out the weekly chart edition for you. So you get Monday through Friday, then you get the weekly. It's thrown in there, and I am a seasoned pro. I've been through this. I've done this. I have the experience, and I am a market technician at the end of the day. I do not say, oh, well, the value of this, the price earnings is this, and you should own it. No. If the chart action isn't there, I don't care what the PE is. PE can go to zero as far as I'm concerned. You step back, you make sure charts and fundamentals come together if that's what you're going to do. But at the end of the day, I believe in the charts more than the fundamentals. And you'll say why, and here's the reason. Everything known about the fundamentals is priced in when you look at the current price of the chart. It's really that simple. So now you got to read the tea leaves and you want to go with the trends. To find out more, just go to our website. It's all under my area called research. You can click up here. It'll take you there as well. Sorry for being this lengthy, but there's so much tonight and I wanted to get it in your hands. I'm Ira. You have a good day.